Many times we think when we buy something it's a good deal, but science can say it is not. Hi everyone, this is Oli from Failures to Grow channel, where we talk about finance, visions, opinions, and other topics, and maybe a fairy tale will come in the future. For today, I want to talk about something that I found: Divi generator formula. What is it? It's a formula, so mathematical pattern that is based on stock price and the dividend value of a company that pays dividends. I was thinking about many things, and this scientific result proved me I am right. Um, that when we buy companies to get dividends, many of them are well known, they have high price, so we consider them as good quality, and they bring us, let's say, high dividends. So, which is great, and they are stable, and there is low risk for investors. So it can be used by many people or institutions that want to make sure they have safe investments. But also there are companies that are not well known or unknown, let's say, maybe from different kind of parts of the world, or even from the world that we know, like Western world, let's say, but they are cheap, they have lower dividends, but when we count, we find they have very good results that I call dividend return. And I believe this video can help you, for example, to do stock picking in very efficient and simple and easy way. So, Divi generator formula, it is something as I call this pattern, and it can be called just like DGF. DGF equals the value of the dividend divided by the stock price. The units of these two are USD, so the result is without unit, right? And now let's talk two companies. So it will be company A and company B. As I said before, company A will be something which is very well known. Most of the investors know it, so they go for it. Let's say it's a brand, like fashion brands and these things. Everybody wants it because we know it's quality, etc. And it is quality. I don't say it is not. So the company A stock price at the moment will be 60 USD. The dividend will be 0.25 USD per share, or 25 cents per share, which seems pretty high, right? And after we have company B, the stock price at the moment will be 12 USD. The dividend will be 0.10 USD or 10 cents, which seems like cheap company, and the dividend seems less than 25, but maybe from the numbers that we see on the screen is logical, the cheaper company will be better. But how to prove it? So I was thinking one day, maybe it's written somewhere in the books, I really don't know, about these things. So let's do this. DGF company A equals 0.25 divided by 60. The result is 0.0041666. So this is the first company A. And now we have company B. So DGF B equals 0.10 divided by 12. And the result is 0.008333. Now we will compare them to each other. So the company B, the result of DGFB is higher than DGF A. What does it mean in other words, let's say out of mathematics, in normal words, that can everybody understand? The company B, when I buy it as a company that brings me dividend, and I don't think about the gains on the growth of the company. I'm thinking only about the dividends. Is more effective for me as an investor because first of all, the price is cheaper, and the dividend compared to the price is higher than the company A. It can be, let's say, a small cap company, for example, but the small cap company is here or at the market for many years, 20 years, for example. They have dividend payouts, for example, 15 years and more continuously. The dividend grows, but they are not part of, for example, S&P 500, or also they are not, for example, blue chip, you know. But it doesn't matter. You know how it is. When we talk, for example, about Warren Buffett, he's talking about penny stocks. They were called it differently before. I just don't remember how, but it's not important. And this gentleman says something like, "We're buying something, which is like under the ground." So, and after it brings us the profits. And this is what we do. Even, for example, me, in this case, I'm buying companies that are here for, I can say, I think, ages. They are cheap. The price is actually cheaper and cheaper and cheaper, even when it looks, for example, like it's a little higher, but it's cheaper because of the inflation. So we can say the price is decreasing for us as investors, but the dividends are increasing a little bit. So the results in the final are very, very good. So this kind of investment, when we use the formula, the Divi generator formula, and we compare two companies and more, of course, between each other, we can find the most effective way of investing our capital, which means where to invest it. Mm, Now, that is one thing, some companies pay dividends, once a year, for example. So probably if I choose the companies that pay dividends once a year, then I want to have the highest possible dividend. I can use this pattern as well, of course. And after, there are dividends that do dividend payouts quarterly or monthly. So when we count it after, the higher dividend, in this case, I mean, when we use this formula, which is paid quarterly, can be in the final less than the dividend that is paid monthly. Even if the company which we find by this formula better will pay you more. But because you have another company that pays monthly dividend, in the time it's better for you as investor. So it is important to think about that. And maybe I'm talking a little like, I'm creating something like conflict of interest between my words. It is not because I want to protect my speech, let's say, or protect my words from let's say, for example, legal action or something like that. Not at all. This is just something which is reality, and time and mathematics or mathematical model that we can create in Excel, for example, or in a calculator, can show us the difference. The fact is, the prices of the companies are volatile, which means they change daily. Sometimes a lot, sometimes not. Usually the change is not that high. It depends. You can find company that will give you 100% a day, for example. In this case, I still believe there is something like a little bit of luck, because when you have a broker, for example, you see these results always after it happens. So we are always like, let's say, I don't want to tell anyone to stop investing or trading, because they don't earn money. Even if you earn, for example, 2% per trade, and I was talking about investing versus speculation in one video, but sometimes I do stuff. So last time I did, for example, 4% a day with very little bit of money, just like a play, just to confirm my thoughts, let's say. So there is absolutely no risk when you, for example, lose, I don't know, let's say 10 euros, for example, or something like that. But to learn is important. And this is one quote that I learned from people from network marketing in general. Once you know to control low money or small money, then you can start to control big money, and not vice versa. First, you have to control small money, and after you can control big money. For today, it's everything. There is no financial advice in this video. I believe you liked the video. I believe it was understandable easily. And please subscribe, make like, hit the bell button to see the notifications, the news of this channel. Comment to tell me about, to show me your opinion, to share your opinions with me, because it is important for me to know what you think about this project. And I'm thinking about this formula before we stop this session. Maybe it can be used even while you do staking on crypto, which is very, very risky. And I don't do it myself. I tried it once, but it was a scam, right? We have to try everything, especially when there is something new. And yeah, this is the way how we learn and how we know what to avoid and what to choose. And these things, like just things in life, for example. So maybe I will do something like this formula, but for staking, because I don't know exactly the numbers, or I don't remember it. I did once only. So yes, next video, I'm thinking what it will be about. You know what? In next video, I will tell you actually who I am. I mean, something about myself, something about my history, not only the investing history, and maybe we will get a little closer to get to know each other, and see you next video. Bye bye.